Wednesday, July 31st, market analysis, Stan Ehrlich. Good morning. 9:47 California time. We have a very strong rally today. Currently, the indexes are up pretty good, especially the S&P 500, the DIA. Now, we have made new highs. Oh, by the way, I start out with stock market indexes, go to futures, and then cycles, crypto, sectors, a variety of other things occasionally. Now, we rallied above the high of the last 4 days this morning on the E-mini daily chart here. I think we still are in a decline until October. Here's the thing. We're expecting an FOMC meeting announcement, California time, in about an hour and 10 minutes, 11 o'clock, I believe. The market has built into itself now some good information. Obviously, they're going to say the market thinks. The FOMC is going to say, well, we're going to lower the rates in September or maybe even sooner, something good for the market. If they say that, it's built into the market to some extent or another already. Markets move on anticipation and reverse on realization. So if it comes out the way the market's expecting, what's new, what's going to be coming out soon, that's going to even make it go up even more, faster, quicker, better? Nothing, I think. And it's going to start to slip back down again. If the FOMC meeting or announcement, their tendencies or likelihoods, I forgot what they call it, comes out not as good as we are expecting, wow, that could cause the markets to break down a tremendous amount. In fact, so much so that they could make new lows for the day and even make new lows for the trend down here recently. That's going to break the support area. That's going to be very disappointing. So watch out, people. Don't get influenced by this at this moment. If they come out with something good to say, and I'm not a fundamentalist, but, I've been doing this for half a century, so I got to have some insight to it. If they come out with something better than what the market is expecting at the moment, we could rally up a little bit more and maintain these price levels and not necessarily flip-flop back down. But frankly, I would be very careful here. I am not trusting this rally. I think that we're setting ourselves up for another sharp break. On the E-mini 5-minute chart, we have new highs for the last few days, and I expect to see this resistance area stop the rally. We might be able to get to 56.30, 56.29, I'll say. But I'm even a little skeptical about that. I didn't even think we were going to get above the high of 55.35. Of course, it did. So no change in overall opinion. It's just trying to figure out where the rally is going to stop. SPY, same thing, except we have a little up gap this morning. And gaps are almost always closed. So coming down to below today's lows at a minimum, I think is extremely likely, and it could happen at any time within minutes or a few days or weeks. Move this out of the way. So no changes despite the minor new highs here. Not particularly surprised. Remember, some of these indexes did get oversold. And here we have the 5-minute chart on the SPY. Little gap up, blew through some buy stops, came up to a little resistance, maybe rolling over now. Can't be quite sure about that. Let's see. I'm just warning you, very, very careful with this rally. Don't run after markets. It's almost always a mistake. You run after a market going up, you typically end up buying the top or real close to the top of a rally. Classic psychological mistake. Qs. Same as spiders, basically new highs for the last 4 days. But remember, the QQQ has been, and the NQ has been leading the way down, did get oversold. So I have no surprise here. Oversold conditions probably usually do produce a rally sooner or later, and it's usually sooner than later. So we could get a little bit more strength up to the resistance here at 473 and 3/4 and drop down. And that means the FOMC meeting announcement might be good news. But what happens if the market does go up a little bit more, stop, and start turning back down again after all this good news? People who don't understand the market are going to go, why is it going down when we got good news? This looks like a big buying opportunity. I'm sorry, they don't realize it's been going up too much, too fast, too long for months in anticipation of this kind of thing. So be careful here. QQQ 5-minute. Same kind of commentary. I'm not changing my name. I'm not changing my strategy. I'm not changing my expectations. Now on the NASDAQ, we finally got stopped out of our great new short positions on July 11th and July, was that 12th, from an ER1 overnight and ER3 overnight trades. The green dotted lines represent the trade lines all the way from the top day of the market and the day after to under where we are right now. We got stopped out where the green lines end. So that's it for that trade. Turned out to be a whopper. Great. We'll see what happens next. We also got oversold. So rallying back up to, again, 19,718. Yeah, about there. Might be the best it can do if it can get that high. NASDAQ 10-minute chart showing you the same trades, but in much greater detail. Short 11th and 12th. Green trade lines all the way down with the trailing stops, of course, and they move automatically, 100% automatic. The kickers, I call them, because you can kick the speed at which the stop moves to a higher or lower rate speed for scalping or for intermediate swing trades, which I typically do as well as scalping with the strategy. And longer term trades are fairly rare. I would call this a swing trade, even though it's a long-term swing trade. Scalps are scalps, in and out same day. Swing trades are a few days, 2, 3, 4, 5, maybe 6, 7, but 2 weeks, 3 weeks, could still be a call to swing trade, which doesn't ever have an exact definition, but it's certainly not an investment or long-term trade, a few weeks. That would be several months or even much, much more than that. Next chart, YM got a sell signal on the top of the market to the exact day. We're coming up into approximately the middle of the range of the bearish engulfing, which is very common, although it usually happens within 3 days or less. I've seen it take a while, and here we are. No signals, nothing to do as far as my strategy is concerned, but it just adds fuel to my bearish idea here. And we're just looking at the 5-minute YM chart. Russell, up against resistance again. Another reason to believe this index is going to turn down with the others. Russell, 5-minute chart, right up in the same ballpark area it has failed at before. We're going to go to bonds. Bonds are not overbought at 70 in a small number, but they are a little bit above a resistance area. But I still think that this slightly upward slanted trading range, upward slanting channels are normally bearish patterns. They break out to the downside and have a move down of some sort sooner or later, usually. There's exceptions, unfortunately, to all these kinds of rules. But it's in a position to either rally up a bit more and then fail, or maybe it won't hold these levels. Remember, I think we're going to see it be very active at 11 o'clock California time, an hour and a couple of minutes from now. Okay, notes. They are now overbought officially. We did get above 75 at the high of the day, and It is smack dab at the top of this upward slanting, if you want to call it upward slanting channel, and overbought. So this great combination, I think it's about ready to turn down. Crude did get oversold one day, and we had a whopping rally. We're high and last right now in the crude. I think it's going to come up to 79.07-ish, maybe even a little higher. But we've gotten a longer term or intermediate term downtrend started here. Let's reset the screen. Okay, good. A high, a low, a lower high, but a higher low. Now that's kind of a definition of the beginning of a pennant. A lower high, and then yesterday, a higher low. So you could even draw another line if you wanted from this point through here. Interesting. I actually don't like that. I'm going to erase that. So I'm looking for a little bit more strength in crude and then down again. Natural gas. It got almost exactly. I can't see how visually it's more than exact. It's just perfect. The low of the move yesterday was at my minimum downside objective I've been talking about for weeks and weeks. Now what? Well, we came extremely close to oversold. We got down to 25.13, and I need 25 or lower. So that's almost good enough. But it's not 25 or lower. Otherwise, we would have turned the price action yellow. My code. So I'm expecting a rally back up to resistance, 2.3 something. Stop rallying and turn back down again. Heating oil, oversold for one single day. No particular support level, but it has rallied a lot today and also gotten up fairly close to the first potential stopping point at 2.45, and maybe it'll get up to 2.49. Let's call it 245, 250. I meant 250, and a possibility of a teeny bit higher than that. No signals lately. Next, gold, platinum, and silver, and you're going to watch the silver and the platinum in a moment. Big sideways trading range in gold, waiting for some signals, trading between a rock and a hard spot. So, nothing really to say too much here. Rallying a little bit. Silver, head and shoulder top right there. Small one. Took about 2 weeks to form. Minimum downside objective right there. Reached it in 2 days. Went a lot further, got oversold, and now we're rallying fairly nicely. And I expect to see this market end up, just a moment, please. Okay, so I have no expectation that it's going to go too much further. There is the possibility it could come all the way back up to the neckline on the big pattern. The big pattern started way back on April 12th, got to the middle end of May for the head of the formation, which is a little double top. And the last shoulder is by itself a head and shoulder top, which has already worked. As I said a moment ago, the big pattern has a downside objective of 2409, and that's what I'm looking for. This rally is totally expected, as I told you in the last couple of days, because of the oversold condition. Now, it should come back about halfway up to the neckline, which it has done today. Maybe closer to the neckline, but the key here is do not go above the neckline, do not close above the neckline, and that's at 30.5 at the moment. It's dynamic, it moves upwards a little bit over time. I'm looking for it to turn down any old point here. It's beginning to hit a little bit of resistance and then head south. Platinum, same thing, and I got to slide this over to the right for you guys. Shoulder over here, head of the formation, we got a bearish engulfing at the top of the market. Perfect. Head and shoulder top as the last shoulder on the bigger pattern has not even reached its minimum downside objective on the last shoulder high, which was a head and shoulder by itself. So the rally is coming up fairly close to the neckline of the big pattern, which certainly has been initiated, started, neckline broken, on its way down. So this tells me platinum doesn't have much more room to rally and should turn down real soon. Again, we should not go above 996 and we shouldn't close above that, that's for sure. I've seen markets go above the neckline and come back down and close on it or below it and still be okay. But the rule is basically don't close above the neckline. Yeah, it sometimes fiddles with it a little bit, but that's it. I'm looking for a lot lower. The platinum market has a minimum downside objective of 808. Next, high grade copper, oversold and bouncing. Going to go up back up to 4.28, maybe a little higher than that, and then turn down. Next, soybeans, soybean oil, soybean meal, corn, wheat, cattle, hogs, and crypto, Bitcoin. So we're not oversold. We're close. New low for the trend. Probably has a little more downside until getting oversold, but I wouldn't be going short down here. Looking for a possible bullish engulfing rally, but again, I haven't got it yet, and we'll see what happens in the next few days. Probably close to a minor low. Soybean oil did break into new low ground, and for all practical purposes, that basically killed the giant head and shoulder bottom I was talking about before, and was always very skeptical about it because of the size of the formation as well as the location of the formation. So there's no, in my opinion, anymore. This whole mess here used to be the last shoulder, 2 years developing. So this new low, way too far to the right, pretty much killed it. I'm rallying because of oversold and because of support. Now into resistance, got no faith about the rally going very far, and expecting it to turn down to new lows after a little bit more of a rally, maybe up to 44.17, and possibly a little bit higher than that. Meal, the only one of the bean complex and corn and wheat that has not broken out to the downside and provided major long-term signals. I expect that to happen. I think it's going to happen in the next few weeks. Maybe it'll take a month or so. But I have a downside objective still of 305 because of the double top formation with a bearish engulfing ER sell signal at the top on the second high. Perfect. So looking for this to turn down big time soon, like now. Corn, new low for the trend, major downside breakout on June 28th, very bearish, short-term, intermediate, and long-term. The only minor saving factor is it's close to being oversold. So a little bit lower, get oversold, turn yellow, a warning, yellow's a warning, and have another rally, probably back up to about 390, 391.23 in corn. And that rally from a slight bit lower should start maybe later this week. Today's already Wednesday. Wheat, almost a new low for the trend, came down to Monday's low and has an outside up day, a bearish, bullish, engulfing, plus the fact that we were oversold on Monday within the allotted look back number of days. Secret. And there we go. We're supposed to rally now. I got a green bullish engulfing on July 19th. It really didn't work at all. And another one on July 24th. So this is the third one, all within a relatively narrow trading range. And it's unusual to find three bullish engulfings, whether they worked or didn't, in a couple of week time frame. This one could have good results. I'd be looking for a minimum of 556 and probably up to 583. Cattle, overbought, little double top, two highs almost exactly the same price in a resistance area, and we're making a new low today since that happened a few days ago. Starting to touch some support. Now, it's not like I'm super bearish here, unless we start to get below the breakout point at 181.85. Then the double top kicks in, and we should go down at a minimum to 174. Meanwhile, there's a possible double top, but we got support. Trend is up, about the best I can say. Miss Piggy. Overbought resistance area. No impression whatsoever that we're involved in any kind of a major turn. I'd expect it to bounce a little bit more maybe, and then turn down to new lows here, 74, 73, 72, and even lower. Bitcoin, pretty much a doji inside trading range today, has been going up very nicely. Monday's the highest high for the rally. We had two signals. One didn't pan out on the close, but was a bullish signal during the day at one point. So you got to take this with consideration. Actually, I'm going to remove that. So the best signal was on the bottom. Bullish engulfing, classic ER buy signal, worked great last few weeks. I think it has a chance to go into new high ground again. I am not particularly fond of Bitcoin stuff, or crypto, I should have said, as a general category stuff, and don't have a lot of history watching these kinds of prices move. So far, so good with this buy signal, but pretty much it's already done its thing. Let's check out the indexes again one more time. E-mini hanging in there pretty good near its highs, and the NASDAQ pulled back just a little bit, not much. You guys have a great trading day. Profitable trading to you.